Hey guys, welcome to the channel. I'm your host Sharwan and you are watching Ind AS by Sharwan. So earlier we have discussed about the Ind AS 1 and also Ind AS 109. So this time we will discuss about the Ind AS 7 versus existing accounting standard number 3, which is a cash flow statement. So we will discuss about the difference between the earlier accounting standard 3 and now Ind AS 7. So we will discuss about the differences between those two standard, and I will tell you about the differences by reading the differences which is written in this book, which is like the overview of Indian accounting standard overview by the ICAI. So it's a very good book, and the link of the PDF file of this book is also given in the description column. You can check it out. So I'm going to tell you about the point which is difference between the Ind AS 7 and the existing accounting standard number 3. So I will tell you whole differences by way of this book. So the link of this book is in the description, so I will read it out and you can also check if you want to check out the difference between those two early standards. So it's a very good book and I will suggest you to buy it so that you can also get the idea. Alright guys, so now we should start our video. So the first difference which is written in this book is that the Ind AS 7 especially include the bank overdraft which are repayable on demand as a part of cash and cash equivalent, whereas the existing accounting standard 3 is silent on this aspect. Refer paragraph number 8 of Ind AS 7. So he's saying, the book is saying like Ind AS 7, in Ind AS 7, it is especially saying like bank overdraft is which is repayable on demand should be part of the cash and cash equivalent, whereas the existing accounting standard 3 was silent on this aspect. So now paragraph number 8, we should check first of all what exactly paragraph number 8 of Ind AS 7 says. So as you can see right now into your screen, it says paragraph number 8 says like bank borrowing are generally considered to be a financing activity. However, where bank overdraft which are repayable on demand from the integral part of the entity's cash management, bank overdraft are included as a component of cash and cash equivalent. So it's simply saying like bank overdraft are included as a component of cash and cash equivalent. A characteristics of such banking arrangement is that the bank balance often fluctuate from being positive to overdrawn. So sometimes it happen in the business that from positive to your bank balance is also bring down in the negative. So it says like the bank overdraft. So you don't have to do like bank overdraft should not be part of the financing activity. It should be part of the cash and cash equivalent itself. So this Ind AS is saying you in a specific manner, but earlier accounting standard 3 was not saying you anything about it. But earlier maybe the people or the companies used to do this, like they used to include this into the cash and cash equivalent, but now the picture is clear. The Ind AS 7 is itself saying you to include the bank overdraft into the cash and cash equivalent. So I think that is not much material to you guys. So let's move to the next differences, which says like this. So next difference is like Ind AS 7 provide the treatment of cash payment to manufacture or acquire asset held for rental to others and subsequently held for sale in the ordinary course of business as cash flow from operating activity. So it says like this. So you acquire some asset and you put it out on rent, and then subsequently you sell out those assets. So it's the accounting standard is saying, Ind AS is saying you like when you first buy the asset, then that will not be your investing activity, that be your operating activity. And when you will sell out those assets which you put out on rental income, so that when you sell it out the asset, then it will also be your operating activity instead of investing activity. So like you purchase some asset and you put that asset into the rental. So when you purchase this, it will be your operating activity, and when you will sell it, then also it will be also your operating activity instead of investing activity, because you are putting out those assets into the rental income. And it's also saying like further treatment of cash receipt from rent and subsequent sale of such assets as cash flow from operating activity is also provided. refer paragraph number 14 of Ind AS 7. The existing accounting standard 3 does not contain such requirement. So like when you receive the rental income, so that rental income will also be your operating activity instead of investing activity. And when you subsequently sell such asset, then also that will be your investing, that will be your operating activity, not your investing activity. But earlier accounting standard 3 does not require such kind of a thing. So paragraph number 14 of Ind AS 7 says you this thing. So we should take a look at exactly what paragraph number 14 says you. So paragraph number 14, as you can see right now is on your screen, it says like some transactions such as the sale of an item of a plant may give rise to a gain or loss that is included in recognized profit or loss. The cash flow related to such transaction are cash flow from investing activity. So it's saying like sale of an item of plant may give rise you a gain or loss, so that will be your investing activity. However, like that statement is now cutting, and it says like however cash payment to manufacture or acquire asset held for rental to other and subsequent held for rental to others and subsequently held for sale as described in paragraph 68A of Ind AS 16, property, plant and equipment are cash flow from operating activity. The cash received from the rent and subsequent sale of such asset are also cash flow from operating activity. So you can see clearly that it's saying like you put out an asset on rental income, and when you purchase it, it will be your operating activity. When you will sell it, it will also be your operating activity, and the rental income will also be your operating activity, and when you will sell it out, then also it will be your operating activity instead of investing activity. So this is means that may be relevant for only the few guys. So that is just a clarification. That thing was not there under earlier accounting standard 3. Now the next thing, it says like Ind AS 7 include the following new examples of cash flow arising from the investing activity. So just few examples is added into paragraph number 17, which is regarding the cash flow from financing activity. So just a few example is added into the Ind AS number 7. So let's take a look at what exactly are those examples. So the example is given in paragraph number 17. So if you will check it out, the paragraph number 17, then like clause number B, C and E is just the example which has been added into the Ind AS number 7. Not much relevant and not much material for you guys. Just check it out the example so that you can get the idea what exactly are the examples. Next one is not much relevant to you, so you can skip it. And then next one, fifth point, is like the existing accounting standard 3 require the cash flow associated with the extraordinary activity to be separately classified as arising from operating, investing and financing activity, whereas Ind AS 7 does not contain this requirement. So under earlier accounting standard 3, the cash flow associated with the extraordinary activity should be separately classified as arising from operating, financing or investing activity. So like extraordinary activity separately classified into operating, financing and investing. But in the Ind AS 7 there is no such requirement. Why? Because under Ind AS there is no extraordinary item at all. So Ind AS 7 or any Ind AS does not say anything about the extraordinary activity, because there is no such extraordinary activity requirement under Ind AS. So when you will also check it out, the revised schedule 3, then you will see that there is no extraordinary item into the profit and loss account. So if you want to check it out, then you can see right now it's into a screen. This is the schedule 3, old schedule 3, where it clearly says like exceptional item and extraordinary activity. But right now into a screen is now the revised schedule 3, where it clearly says like only the exceptional item. There is no word written as extraordinary activity. So under Ind AS 7 or under any Ind AS, there is no such item which is called the extraordinary activity. So therefore this clause is nowhere into Ind AS number 7, which says you like extraordinary activity classified into operating, financing and investing. So no, because there is no extraordinary activity, so therefore this clause has been removed. Now difference number 6 and 7 is regarding the subsidiary, like disclosure in case of a subsidiary. So I will not going to read it out. Clause number 6 and 7 just tell you about this thing from the Ind AS number 107. So open your paragraph number 40 and you will see the changes. So as you can see right now into your screen, paragraph number 40 and then clause number C and D has been added, and paragraph number 42, 42A and 42B is also been added into the Ind AS 7. So what exactly it says? So it's like heading is like changes in ownership interest in subsidiary and other businesses. So that para was also there in Ind AS 3, but disclosure requirement number C and D has been added. So let's see what it says. So like an entity shall disclose in aggregate in respect of both obtaining and losing control of subsidiary or other businesses during the period each of the following. So this thing has to be disclosed in aggregate in respect of both obtaining as well as for losing the control of subsidiary. So A or B requirement was already there. Now C and D, what it says, like you have to disclose the amount of cash and cash equivalent in the subsidiaries or other businesses over which the control is obtained or lost. So now you have to also disclose the amount of cash and cash equivalent in the subsidiary or other businesses over which you lose or you obtain the control. And then the D, the amount of asset or liability other than the cash or cash equivalent in the subsidiary or other businesses. So other than the cash or cash equivalent, why? Because that is also already contained in clause number C. The amount of cash and the amount of asset and liability other than the cash or cash equivalent in the subsidiary or other businesses over which the control is obtained or lose, summarized by each major category wise. So two things is required to be disclosed: cash and cash equivalent and the amount of asset and liability summarized by each major category wise. So this thing is there. Apart from this, paragraph number 42, 42A and 42B is also added. You can check it out. That thing may not be relevant for all of you guys, so therefore you can just check it out by yourself. So this end up clause number 6 and 7. Now clause number 8. Clause number 8 is also not much relevant to you. It simply says like Ind AS 7 mentioned the use of the equity or cost method while accounting for an investment in an associate, joint venture or subsidiary. Refer paragraph number 37 of Ind AS 7. It also especially deals with the reporting of interest in an associate or joint venture using the equity method. Refer paragraph number 38. The existing accounting standard 3 does not contain such requirements. So simple statement is there. In paragraph number 37, it says like when you will read it, it says like when accounting for an investment in an associate or a subsidiary accounted for by use of the equity or cost method. So just like the wording equity or cost method is now there into Ind AS 7. Earlier the word like equity or cost method was not presented, and apart from this paragraph number 38 is also there in Ind AS 7, which was not earlier in accounting standard number 3. Again, this clause may not be relevant for all of you guys, so you can skip. And then the next one is like Ind AS 7 uses the term functional currency instead of reporting currency. So under existing accounting standard 3, the wording is like the reporting currency, but now the wording has been changed to functional currency. Not much relevant for you, just the wording is changed. And Ind AS 7 also deals with the translation of cash flow of a foreign subsidiary, whereas in the existing accounting standard number 3, it is not dealt with. So paragraph number 25 is added into the Ind AS 7. Let's see what it say. It says like paragraph number actually 26. Paragraph number 26 has been added. It says like the cash flow of a foreign subsidiary shall be translated at the exchange rate between the functional currency and the foreign currency at the date of the cash flow. So functional currency and the foreign currency. So you have to now convert the functional foreign currency into the functional currency at the date of the cash flow. So this paragraph was not there earlier in accounting standard number 3. So this is in Ind AS 7. Again, that may not be also relevant for most of you guys. And then the last difference is like that Ind AS 7 required more disclosure as compared to existing accounting number 3. So let's see what exactly are the all and more disclosure which is required by Ind AS number 7. So like disclosure, paragraph number 50, then clause number C and D has been added, which was not there earlier in accounting standard number 3. And then clause number 52 and just clause number 52 is also added, so that clause was also not there earlier. So what it says, like clause number 50, then subclause number C and D, what it says like you have to disclose the aggregate amount of cash flow that represent increase in operating capacity separately from those cash flow that are required to maintain operating capacity. And then amount of cash flow arising from the operating, investing and financing activity of each reportable segment. So reportable segment wise also the cash flow arising from operating, investing and financing activity you have to disclose. Clause number 52 has been also included, which is basically regarding the segmental cash flow, and it just explain what exactly and how you have to disclose the cash flows from operating, investing and financing in case of a segmental reporting. So this was the major changes which you have to check it out. So I think after reading all the differences you may think like this is not very important to you. So the method like direct, indirect is same, the wording is same, everything is same, and like example is also saying nothing changed, just a few minor changes is there which may not be relevant for all of you guys. So I'm just again going to tell you what exactly are the differences. So first difference is like the bank overdraft, it will now be included in the cash and cash equivalent. Second one is saying like if you are purchasing some asset and you are putting it onto rental basis, then when you purchase it, it will be your operating activity. When you will sell those assets which is on the rental basis, then also it will be your operating activity, and then the rental income will also be your operating activity instead of investing activity. Next one is like some example is added into the cash flow from financing activity, not much relevant to you. Next one is regarding the extraordinary activity. In the Ind AS there is no extraordinary activity, therefore not much relevant to you. And the next one is regarding the two more disclosure of the amount of cash and cash equivalent and other asset and liability in the subsidiary or other businesses over which control is obtained or lose. And then addition of also paragraph number 42, 42A, 42B, which is regarding the disclosure in case of a subsidiary or other businesses in which you obtain the control or you loses the control. And then next one is regarding the usage of the word equity or cost method in paragraph number 37, and also addition of paragraph number 38 in the Ind AS number 7. Next one is regarding the changing of the term functional currency instead of reporting currency, and also addition of one more paragraph in which they say like conversion of the cash and cash equivalent of the foreign branches into foreign subsidiary into the into your domestic country. And then translation is like how the translation will be done. Then last one is regarding the addition of the disclosure requirement. So we have seen like two addition disclosure requirement is there, one also paragraph has been introduced. So it's regarding the cash flow from operating, investing and financing activity in place of a in case like segmenting reporting requirement. So segment in case of a different segment reporting, so cash flow from operating, financing and the investing activity should also be disclosed separately for separate segmental operation. So this is the changes which has been done into existing accounting number 3 and this Ind AS number 7. So if you have any query, ask me on the comment section, I will reply by way of a separate video. And just for record, Ind AS is just applicable from this financial year, so we will see when we will have the annual report like how the disclosure should be done, and we will do it, we will see it. So we will also upload the video like how the disclosure in regarding the changes should be done, but not much relevant changes for you guys if you are a simple company. So I just wanna say everything is okay, don't need to take panic. And next one we will discuss about the plant equipment like accounting standard number 10, accounting standard number 6 and property, plant and equipment. So difference between the depreciation and the fixed assets, and now Ind AS number I think 16, which is the property, plant and equipment. We will discuss about the differences between those earlier existing accounting standard and now Ind AS number 16, property, plant and equipment, into our next video. So we will discuss about those differences. So again, I think I should end this video. We will meet again in the next video. Till then, bye bye.